Kevin Prendergast, Director of Wealth Management at the Retirement Network, Leland Smith. I'm recording this video on Wednesday, September 21st, and I'm going to get into the August 2022 segment rates just published by the IRS, the impact they're likely to have on pension lump sums commenced 2023 and beyond. Quick comment on timing of commencement. So we're getting into the final quarter of the calendar year. By now, you've likely had a chance to evaluate your personal situation, or you're in the course of evaluating your personal situation, and you've made the decision to retire or not before the end of the year. And if you've made the decision to retire before the end of the year and you plan to commence your pension as a lump sum, very important to consider carefully the timing with which you commence. So what do I mean by that? When you go into the Fidelity calculator, the estimate tool, it asks you to plug in two dates. The first date is the last day of employment, your final day with AT&T. The second date is the commencement date for your pension. AT&T sponsors a number of different pension programs, sponsors more than one pension program. And while many of them are very similar, they have some subtle but important differences. This is one of them. A good test to run is to run an estimate where you plug in a last day on payroll, let's say November 15th of 2022, just for the sake of discussion. And then in the second spot, that pension commencement spot, plug in the exact same day. So if it's November 15th, 2022 is going to be your last day. And the second spot directly below, plug in the exact same day, November 15th, 2022 in this example. Click calculate at the bottom and see what the system defaults to. Is it the same day, as is the case with the Midwest program, union folks here in the Illinois, Indiana area? Or is it the next day, like non-bargained folks? Or is it the first of the following month, like a lot of legacy folks, right? See what the system defaults to after you click calculate to get a sense of when your pension will actually commence relative to your last day on payroll. That's really important because in most cases, we're not going to want to have a commencement date occur in 2023. Then maybe you get the November 22 segment rates if you're not yet 65 years of age, which would not be a good outcome for many of you. Okay, and if you have questions, feel free to schedule an appointment with one of our advisors on our website. Okay. All right, so let's get into the latest and greatest rates. So August 2022, continuation of the trend that we've observed so far this year. The first segment is moving materially higher, continuing to move higher. So last November was 1.02. Now we're all the way up at 3.79. I'm recording this video just after the most recent rate announcement from the Federal Reserve. This first segment will almost certainly continue trending higher. It is this first segment that is most directly influenced by what the Federal Reserve is doing. Okay? Now, the second and third segments have started to tick down a little bit. They're more market driven. The Federal Reserve might try to influence these rates, but cannot control them quite as much as shorter term rates. So you can see the second and third segments have come down relative to the prior month, but they're still quite a bit higher than last November, right? So 4.62 compared to 2.72 and 4.69 compared to 3.08. All right, so hopefully this is helpful. Again, if you have questions, visit our website, theretirementnetwork.com. Click the Get Your Free Assessment button to schedule a conversation with one of our advisors to review your personal situation. Otherwise, hopefully this was helpful, and we'll see you next month. Take care. Bye.